Welcome to Markets Now. I'm Michelle Roque with Jim McCormick, agmarket.net. Post the USDA reports, we are seeing grains pretty much all in negative territory. We're mixed in the livestock futures. Well, Jim, let's talk first of all about kind of the, I guess the big, not surprise, but at least the biggest thing that we're talking about from the WASDE reports, and that is South American production numbers. USDA kind of kicked the can down the road. They're well above Conab, Rosario Grain Exchange. So that was kind of the big number that you were watching, right?
You nailed it. I mean, that was a surprise. I mean, Conab's been very, very aggressive cutting the crop in Brazil. The Argentinian exchanges are doing the exact same thing, Michelle, and the USDA literally punted. They left their estimate for the corn crop in Brazil, the bean crop in Brazil, the bean crop in Argentina, all unchanged to the surprise of the trade. They did lower the Argentina corn crop by 1 million metric tons, but they're still way above where the South American exchanges are. So I think if you're looking at why the market's under pressure right now, I think they are definitely reacting negatively to that surprise that the government chose to kick the can.
So why is USDA been so stubborn in terms of especially these Brazilian production numbers, Jim?
I mean, I honestly, Michelle, that's a hard question to answer. I'm really not certain why. I mean, historically, the USDA tends to walk down their numbers. So the fact that they're above these other South American, estimates is not a surprise. But like I said, the fact they didn't make any revisions at all, because all accounts, especially the corn crop down in Argentina, you're hearing a lot of problems with disease and bug pressure. I mean, even the Brazilian corn crop, the safrinha crop, it's doing okay, but you have heard of certain areas that definitely dealt with some extreme heat and lack of rain. So I would anticipate this crop to get smaller down the line. It's just a matter of when, I guess, in the USDA's viewpoint.
Yeah, no doubt. Rosario Grain Exchange, I think, dropped Argentina, 6.5 million metric tons this morning on that crop. So that is one to watch on the corn. What about U.S. ending stocks? We got a few disappointing numbers there as well, wouldn't you say?
Well, exactly. I mean, they did step in the right direction. We are looking for them to cut the ending stocks because they're going to have to raise raise the ethanol usage. It's been going very well. They did that. They also raised the usage for feed, which was anticipated due to the quarterly grain stock number. But the trade, the revision was only about an upward revision to total demand by 50 million. The trade was looking for closer to 75 million. So it was a step in the right direction, Michelle, but just not what the bulls wanted to see. They wanted to see a little bit more aggressive upward revision. So disappointment in that is also adding a little bit to the negative pressure as we speak.
Well, and corn was interesting because we got an increase in ethanol. We got an increase of 25 million bushels in feed and residual, but nothing on exports. And they've been pacing ahead of a year ago, haven't they?
They have. I think that was a surprise. And I would, if the South American, maybe it's kind of hand in hand, since they did not make any downward revisions to the South American crop. Their argument is, there's no, we're not going to pick up that lost production. I would argue eventually those crops will get smaller if the South Americans are correct about their crop size, and the government will eventually have to acknowledge that our export pace is running better than we need to hit their target. So I think we'll have some positive news down the line. It just wasn't there for us today, unfortunately.
Okay, Jim, when are they going to make that revision? Is it going to be after we get into next production year and they revise it going backwards like they have been, or?
I don't think it'll be that long. I mean, Michelle, they may just wait. Now, like I said, on this report, we only get old stock data. Come May, we'll start getting new crop data, June, July. So what may happen is once we get that new crop balance sheet, then maybe they'll be a little bit more aggressive and making adjustments to the old crop balance sheet. But, they could wait. I mean, we've seen these adjustments show up maybe on the June quarterly grain stock report was maybe where you're going to get the surprise. I got to admit, now, to go back to one extra report, the ending stocks or the quarterly grain stock, Michelle, showing the farmer had about 1 billion more bushels of corn on hand than he had a year ago. I think that will make the upcoming revisions of stocks more volatile, I believe, down the line.
Absolutely. Okay, soybeans, as you mentioned, we're reacting negatively. New lows for the move here today. So where do you find the next chart support? What are you looking at?
Right now, I mean, we've taken out kind of the near-term lows. The bean oil is kind of leading us down as well. I mean, the reality is we could push ourselves right back down to the winter lows, unfortunately. I mean, the big market, the market's goal right now in this old crop is to stimulate demand. There's reports out this morning that Brazil sold China up to 30 cargoes of beans. And, if that is the case, we haven't been able to confirm it, but if that's the case, it shows you that we're just not price competitive yet. And the goal of the market now will be to go down to try to stimulate demand. And at the same time, when you look at what's going on the macro front, the dollar continues to strengthen in general due to the fact that the inflation continues to run a little bit too hot. It's too sticky. That means the Fed can't cut rates. If the Fed's not going to cut rates, that will continue to keep money coming into the U.S. shores, firming up the dollar, which just makes us that much more uncompetitive on the pricing of selling beans to the Chinese.
Yeah, you're always one step ahead of me, Jim. I was going to ask you how much that higher dollar and the CPI data and stuff moving together were going to impact the grains. And when you look at the grain in sum total, really, the funds just keep pushing the short side of this market. And right now, is there anything that could get them to switch that trend?
I think the wild card is still going to be weather. I mean, the reality is we're on the second week of April. When you see the funds change, Michelle, it can get exciting. Just look at some of the soft markets, the cotton, the coffees, the cocos. You've seen some explosive move in some of these commodities. The metal market has gone absolutely ballistic here with gold testing near-term, all-time highs. Crude oil is working its way back up. So I think if you can get a little bit of a flicker, plain and simple, a little bit better demand showing up, a little bit more confidence in the trade that the South Americans are right on their sides of the crop and the USDA is wrong. And then something else, we just need to watch the weather. Right now, you're talking some extreme heat in parts of Kansas showing up this week. And I'm hearing clients tell me up near 90 degrees. They've got wheat turning brown. So you're going to hear people worry about dryness issues in the West. It's going to start percolating. Then on the other hand, if you're closer to where I'm at in Chicago and South and East in Indiana and Ohio, they're actually getting too much rain at the moment. So you get people talking about planting delays. It's just you need a spark. And once you get that spark and you start taking out moving averages and resistance, Michelle, I do believe the funds will start lightening up. Seasonally, we should see some strength there. So, the funds are fighting the seasonality. And I think they will cry uncle quick if you give them a reason to.
All right. I hope that happens. Cattle, let's just end with that really quickly. We've had this big sell-off due to the bovine avian influenza and the bird flu concerns. Do you think that this market has all of that worked in yet?
I'm optimistic we have. I mean, the reality is the news moves so fast. What's on the front page today will be on the back burner tomorrow, and we will forget about it in 2 weeks. We haven't seen a lot of stories about it. There's been a few trickle here and there, and the market's really not reacting overly bearishly to it. So I think that's priced out of it, hopefully. And then as we come into Memorial Day weekend, the demand, I think, will still be there. Overall, the economy is still relatively strong. So hopefully that's a good sign for the beef market going along, and we'll rebound back up.
Okay, thanks for joining us. Jim McCormick, agmarket.net, and that is Markets Now.